When I first ventured into Forex trading, I found myself intrigued by the possibility of applying similar strategies to the stock market. However, I quickly realized that while some Forex strategies can be adapted for stock trading, there are crucial differences between the two that require careful consideration. By the way, if you are looking for a reliable broker with very low deposit requirements and quick withdrawals, see the links in the description box below. For starters, Forex markets are open 24 hours a day, 5 days a week, offering a level of continuous access that stock markets don't. Stock markets, on the other hand, have specific trading hours and might even offer extended hours trading. This difference in market availability means that strategies relying on constant access to the market might need tweaking when applied to stocks. Another key factor is the volatility and liquidity of the markets. Forex trading often involves highly liquid markets, but the volatility and liquidity in stocks can vary greatly from one to another. This variation means that a strategy that works well in Forex might need adjustments to suit the characteristics of specific stocks or sectors. Technical indicators are a common tool in both Forex and stock trading. Indicators like moving averages or the Relative Strength Index, RSI, can be useful for stock trading too. However, I found that the parameters and settings for these indicators often need to be adjusted based on how individual stocks behave and the prevailing market conditions. Fundamental analysis also plays a significant role in stock trading. While Forex trading often focuses on macroeconomic indicators, stock trading delves deeper into company fundamentals, earnings reports, and sector-specific news. This shift in focus means that adapting Forex strategies might require incorporating a more detailed fundamental analysis. Lastly, leverage is another aspect where Forex and stock trading differ. Forex markets offer higher leverage, which can amplify both gains and losses. In contrast, stock markets typically provide lower leverage, necessitating a more conservative approach to risk management. In summary, while some Forex strategies can be tailored for stock trading, it's essential to adjust them based on the unique aspects of the stock market. Backtesting strategies on stock data and refining them according to the specific characteristics of stocks can make all the difference in achieving success.